That's the secondary market. Let's just focus the primary market then. Bangalore-based microfinance institution CreditAccess Grameen's IPO opens tomorrow. To discuss that and more, we have Mr. Uday Kumar Hebbar, the MD and CEO of the company, joining us in our studio. Thanks a lot, Mr. Hebbar, for joining us in the studio. We were looking through your IPO details and stuff. So if you could tell us some broadly, the number of, the kind of money that you're looking to raise is close to around 1,100 crores. How much of this goes to the company? How much of this goes to the promoters?
Primary issue is 630 crores, which is going to the company, and 501 crores is promoter diluting, which is the current about 9% of their current holding. So totally 1,130 crores is the IPO size.
So the 650 crores that goes to the company, how much is your current capital as your current CAR? And how much does this increase by going forward?
As you know, this business is very capital intensive. We have currently 29% of capital adequacy, but we need to have a continuously capital rising, capital need, because this company has been growing.
So with the 600, how much does your CAR go up to?
It will go up to 38% immediately, but by within 20 to 24 months, we are actually will exhaust this. We have to go back to capital market again.
Okay, all right, Mr. Hebbar, so we've got the basic details down. I was looking at, a couple of details. One is your concentration in terms of, Karnataka as well as Maharashtra. Both of them together, they account for nearly around 85–90% approximately. And I was looking at your retention ratio as well. That's rather high, right? So the customers are loyal, but it's concentrated in a few hands. Tell us, what's the outlook on that front? How do you decide to change things? And are you looking at other geographies as well in our great India?
Karnataka and Maharashtra have been our key market, where we started our operation in Karnataka way back in 1999.
Okay.
We kept on growing there and the next stepped into Maharashtra. And as of now, we are 8 states and 1 union territory we are operating. We are operating in Madhya Pradesh, Chhattisgarh, Orissa, Kerala, Tamil Nadu, Goa, as well as Puducherry.
All of that don't account for too much in your book, right? I mean, Maharashtra and Karnataka account for almost 85% of your total book. Any adverse movement there and takes your business off by about 85%?
We were 80% in Karnataka 4 years back. Now we are already 45%. And the growth is actually, other states are far superior than Karnataka and Maharashtra.
So does that come at the cost of your margins?
Margins, yeah.
If you see our balance sheet for last 5 years, our cost of operation has been coming down. We are sub 5% operating cost, which is lowest in the industry. And our expansion is basically a district and contiguous base, so that we step into district with carefully and observe it carefully. Our expansion risk as expansion cost is very, very low. Our aspiration is to keep our operation cost is low, which is in our DNA.
Okay, all right. Your aspiration is to keep the operation costs low, which is in your DNA. Now, say we've got another factor. You'll have to keep your shareholders also happy, from post-listing. But I wanted to ask you, sir, what about your borrowing mix? What is it as of now?
We have a very good borrowing mix with the term loans and banking funds together, including non-banking together, about 70%, and about 30% comes from the FEIs, particularly international borrowing, which is a decent diversification.
So over the last few years, if you can tell us what your average NIMs have been?
Our NIMs have been continuously good, around 11.5 to 12.7%.
With the cost of funds increasing, do you think there is a risk of NIMs to come down?
Cost of funds is not increasing. Last year, actually, we reduced our cost of fund by almost 200 basis points. Our average cost of fund is only at 9.5% today. And we are able to manage the borrowing cost very low continuously. And our NIM, there is no stress on our NIM. NIM is continuously very healthy. We grow our NIM by 24% last year, and total 12.8% is available to us. And with the low cost of operation, we are able to continuously deliver good ROE.
Well, Mr. Hebbar, that's encouraging. In the last couple of years, you're saying that you've managed to reduce your borrowing costs, which is great news. But going ahead, there's we are at the end of the rate cut cycle. Now there's going to be a couple of increases from here. So don't you think that will be a bit of a risk to you? And also, final question from my end, your total AUM currently is what, around 5,000 crores? Give our audience a target that you have FY20, FY22.
See, our current AUM is March 31st, 4,975 crores. We have been growing at a rate of 55% CAGR in the last 5 years in terms of portfolio, and 41% of CAGR in terms of our customer growth, which is what we have been able to grow, and our trend is such that we aspire to remain in the trend what we have.
All right, and the last one before I let you go, taking off from where you said earlier, your capital adequacy ratio will become 38%, and in another 2 years, you would also look at raising some more funds. So that will be again equity or debt. What will you do?
The capital adequacy, we need to go for equity only.
Right, exactly.
That is what requirement probably after 18
So you will come to the
months.
secondary markets again in 2 years?
We should be coming to secondary market.
And post this IPO, promoter holding comes down to?
About 80%.
So
and by default, they have to come to 75% in 3 years' time.
Okay.
Okay.
So they will remain there.
So which is what explains the fundraising that he will do.
And so I just didn't get that AUM number. It is at around 5,000 crores. You said that you'll have been growing at a CAGR of 50-55%. Now the base will catch up, right? So by FY20, what number can you guide our viewers to?
Actually, even last year with the larger base, we grew about 62%. While we said 55% is the CAGR for the last 5 years, our aspiration to remain in that level.
Wow.
Okay.
That's pretty confident, sir. All the best. Thanks so much for coming down to our studio and giving us all those details. All the best, and we're looking to chat with you more often.
Yep, and once he lists, so I hope he can give us some more forward-looking statements as well. Absolutely. But with that, we'll sip into a short break, come back.